Hello and welcome to another update video about MATIC. MATIC hasn't really done much in the last couple of days, but it's holding support. So we're still in this yellow support region and we're going to take a look at it. We still have a pretty bullish 1-2-1-2 setup, but ideally we're holding the 78.5 cent level. Below that level, it will become much more difficult for the bulls to generate upside momentum there, because I will have to take that yellow 1-2 setup off the chart. If we get a break below 78.5 cent, it will not be invalidated then, but will most likely not work out anymore. There will be one more bullish scenario left on the chart, which is our alternative wave 2 scenario here, in which this is an A wave down, an overshooting B wave, and a C wave down. So that would come into effect with a break below 78.5 cents. However, then I would be much more cautious about MATIC, and I would more take the approach of, oh, it has to prove itself again, you know. So in the last video I said below 78.5 cents, I'm gonna be done with the chart. Well, maybe that was a bit too drastic, but still, it would still need to prove itself again. So it would not be good if we get a break below that initial 78.6 fib level. Okay, so just a summary again, we have two bullish setups here on the chart. That means if the first one breaks, we still have another one. And we have two support areas. The upper one is for the more directly bullish scenario. It's between 78.5 cents and 99.6 cents. We're in that area and nearly left it again to the upside. And the lower support region, basically it starts at 73.1 cents, but the most important level here is 58.2 cents. So breaking below 58.2 doesn't leave me with any bullish support level that is reliable. Yeah. Okay, so at the moment we're focusing on the more direct bullish scenario because it's still valid as a 1-2, 1-2 scenario, and we could at any point now start a third of a third wave rally, which should ideally take us to $2.12 plus. Let's zoom into the microstructures. In this scenario, there are two pathways. I see this as one scenario. Okay, I think it's important to frame it that way. It's one scenario, however, two pathways how this wave 2 can be completed. The first one is, as you can see in the yellow count, we could even argue that the wave 2 is already over. It's possible because we dipped basically into the middle of our support area, yeah, pretty much nearly into the center of it. Tested the area between the 50% and the 61.8 retracement levels, between 92.9 and 86.7 cents. But we're holding, obviously, support. And yeah, we had a reaction, but the reaction wasn't very impulsive. And because the reaction wasn't very impulsive, I would argue that the short-term price action would rather suggest that we go down a little bit lower eventually, and that would point towards the orange scenario. Colored in orange, it's the same structure really, or let's say it's the same scenario in which we are in the same wave degree of a wave 2. It's just a different pathway the wave 2 can take. It's not the direct route in which the wave 2 could be finished already. No, in this scenario, the initial move down was only the A wave. We're now moving in a three-wave move to the upside, which would be a B wave. And that B wave consists of an ABC pattern. And then after we completed the C wave, we can watch for a five-wave move down, which would be wave C of 2. And then the wave 2 could reset a little bit lower. Expectations would then be for the wave 2 to possibly end around 86.7 or even 78.5 cents. Ideally, as I said, ideally not below the 78.6 fib level. But it will depend to a degree on how aggressive is the B wave going to be. The higher the B wave, the more space the C wave has. Generally a C wave tends to have the same length as an A wave. So if the B wave is higher, the C wave might end higher as well. Hope that makes sense. And B waves can even overshoot. If the B wave overshoots, the C wave might even end above the A wave high. So the A wave low. Yeah. And if we really dive into the microstructure, it's possible that this B wave is currently unfolding. Looks very corrective. We have three waves up initially into the swing high there that was formed on Wednesday. This is possibly a B wave corrective pullback. And yeah, I mean, we might have started a C wave, but it's not very clear yet. We're still forming lower lows, lower highs. But a break above those recent highs at around about $1.01 would indicate that this C wave to the upside basically has started. Now, we're not there at this stage. Yeah. Okay, so just looking outside, it's raining very heavily now. But yeah, like the market basically is raining. Okay, so that's what I mean, it can't always go up, right? So we need those healthy pullbacks. At the moment, I would consider this still a healthy pullback. It's just sad price action here at the moment, yeah. Because we had another, if you might remember, we had another more aggressive pathway to the upside before, which was another 1-2 setup, but that got invalidated. But again, we had this alternative on the chart, which allowed for a deeper pullback as well. So that's sort of what I'm watching for at the moment, yeah. This initial 1-2 setup here is still valid, and only a break below 78.5 cents would make me consider a different structure, which could still be bullish, with a deeper wave 2 there as highlighted in white. But that would then also mean we need to be more on the side of caution, because it will literally be the last reliable bullish scenario left here. That's my update about MATIC. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.